Okay, good evening. Welcome sa inyo. Welcome everyone. Welcome back. This is a live webinar tonight. I posted this morning that we will have this webinar. Okay, so we'll start in maybe 10 minutes. Let's wait for other participants to join us. And while waiting, I will have let's have some music. 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 NCS Dio. All right. So our topic today is a continuation of our price action, our webinar on price action analysis. Okay, I think this already the part 2. No, so I guess I have to change the title. Sorry for that one. So I think this is already part 2 or part 3. So this is supposed to be part 3B, part 3A. All right, A, because I think we will be needing another round or 2 rounds of this webinar to give you more examples. I wasn't able to get good example, lots of example for this one. So we'll discuss this. For this is very basic. So I guess next week or this coming weekend, it could be this Sunday, that we'll have our second part of this one, or part 3B. All right. So let's just wait for our participants. While waiting, kindly read the disclaimer. Disclaimer here. All right, and let me remove this first. And full screen and right. That's it. And of course, I have to copy the link. Participants, while waiting, take this link and I have to post it in our Patreon. So basically, this is for Patreon, but for this tonight, I'm going to make it available for public. So here is the link. Right? Okay. All right. So put your leave comments in the comment section. Good evening. Good evening, Don Raydan, Don John Marco, Christopher, and Joel Morales. New learning naman. Yes. This is a free webinar tonight. This is actually already a part. I forgot maybe if it's a part 2 or part 3 already, but we already finished a part 1. Part 1 last week, that was strictly for technical analysis, for price action analysis. This one is still a continuation of price action, but this will focus more on breakout or breakdown strategy. Next week we will be discussing how to use the double bottom and inverted head and shoulder in this price action analysis, and we will be having lots of part B, C, D of different parts of the part 2 and part 3. All right, and while waiting, let's play some music. Okay, I think music is playing now. Alright, then I can remove now the disclaimer and show you. So this is going to be our featured point. So definitely this so this is the one I posted this afternoon. I'm going to discuss this in detail. We will be discussing 3 scenarios for our break and retest strategy. One is for ascending or descending triangles, one is for continuing trends, and another one is for the consolidation. All right. May YouTube link pa sa Patreon. Yes, I just posted the link. Okay? About a minute ago, no? So, this is the link. Just click this one. And... okay, so, we are live right now. Now, just click this one. So that our friends from Patreon can also join us. And definitely this is for them. Good evening from Japan. Okay, so no charting for tonight, ha? This is strictly for strictly webinar for technical or price action analysis. So 5 more minutes. Then while waiting, I'll prepare my coffee. All right. For our so dun sa ating Patreon, no? Any comment, no? Were you able to watch or attend our live webinar last week about the price action analysis? This is actually now part 2, no? Sorry for that. This is part 2 and this is actually part 2A. Maybe this coming weekend, we will have part 2B. The following week, we will have the part 3. But of course, most probably, there's going to be part 2C to give you more examples of this one. And I chose this one because this is very recent, no? As you can see, this is actual what's happening right now for Bitcoin. I posted this one, hopefully, okay, I'm going to show it here in our, okay, I'm going to show it here. So I posted this both in our Solana FB group as well as here in our Raging Bullish Trading. So about 8 hours ago, no? So I posted this one. I said that if you want, just send me a message to get the link. But I decided to make this public. But kindly share this now to your friends while we're not yet starting. No? So this is the actual screenshot or also of my post, right? So I said that this is our topic for tonight, and this is the actual screenshot. The price during that time, it was just on its third retest of resistance of our area value. Okay, and the actual chart right now is this one. Okay, so I'm going to discuss this in detail. And of course, what else? Am I forgetting something? Pasensya na, English tayo kasi, no? We have non-Filipino members, subscribers of Patreon, and of course, followers of our Raging Bullish Trading, no? Requesting us to speak in English, discuss this in English. So, pasensya na, no? But, actually, that's what I'm doing now. Last time, I discussed in Tagalog, in Filipino language. Then, I'm going to prepare another video of same topic, no, webinar, but in English, but it's no longer going to be live, no? It's going to be pre-recorded. This is live. Then I think I'm going to prepare another one in Tagalog, but a pre-recorded training course. Sorry for the background music. Thank you for reminding pala. Ayan, okay. Sorry for that one. I think I can remove the music. Okay, thanks, Don Mehan. And Don Kenneth. See you. Yan. Ganda ng topic, oh. And of course, no, yung talagang our trading course is focused on harmonic price action. Now, I'll be strictly discussing about price action. Strictly because after this one, there's going to be indicators wherein technical analysis comes in. Like, for example, we will be using oscillators, we will be using RSIs, we will be using moving averages. But for now, okay, we will just discuss purely price action. We will focus on this one. Then, yeah, and I think that on the part 2B or part 3B, that is where we will be using other indicators, no? Together with our price action. And of course, with this one, we can apply our harmonic pattern. So that's why we have harmonic price action in our price action analysis to include the harmonic pattern and how we can use that. As I mentioned, no, this is ladderized type, no? Our training courses are ladderized type. So that's why Like for example now, so I'll be focusing first on price action. The succeeding videos, we will be including technical analysis. So this is okay even for beginners, no? I already remember. I received lots of message requesting for a link. So here's the link now. Nako, where is it? And I'm going to give it to them. Copy link. Okay, and I'm going to send it. Let me remove this. Put it here. And give me a couple of minutes, no? I'm going to give them, send them the link. Link. Okay. I'm going to give this to the one of GC that I'm a member. Paste. Okay. So there it is. And, okay, what else? So I have this one, copy, and I'm going to give them the link. So, this may take a few more minutes, no? Because I have to give it to them one by one. Unless I use Zoom, then that's the time that I can give them advance copy of the link. But since we are using YouTube, because in Zoom, no, it's very limited. It can only accommodate 100 members or participants. So that's why we use this. And of course, I have to convert the video. What else? And start na po kayo. Okay. How to join. So, couple of minutes more, sorry for that one. So, I'm sending out our link, no? To those who requested for link in my inbox. Link. Okay. Sale. And of course, for that one, music again. Music, no need for music. So I think I have to send about 20. There's about 20 requests, no? Requests for the email. Oh, saan may good evening, sir. Okay. Okay. Link, please. Okay. Sorry, I haven't set my instant replay. Replay. Uy, si Jeff. Jeff, nanonood ka pala, ha? Ayan, sige. Jeff Mila, anak yan ng kaibigan natin sa badminton, at saka syempre ni Charlie. Okay, remind me tonight. Few more minutes, sorry for that one, few more minutes. I have to respond to them one by one, so sorry for that. Sorry for the delay, but I guarantee you, no, this is worth your time. Free ba ang webinar? Yes, it is free. So, that's why I'm sending it to you now. Ang dami pala. I think mga 30 itong nag-request na sa atin. Kasi I told them to remind me before 8 p.m. And it is already past 8 p.m. Sorry for that one. Sorry if we will start late. One more. Okay, I think that's it na. You have more? Wala na? Now watching how to join. Sorry, I'm still replying to those who sent me out messages or requesting for the link. Sorry for that. Okay, I think we are good. Okay, so we are good. We can start. All right. So, coffee. All right. So, our topic for tonight is about, let me Okay, shout out to all of you ha. Pasensya na. For any question, just put it in the comment section. If I have time, then I'm going to answer it one by one. Okay, di ma-save sa training course. Nasa work pa kasi. Yes, this will be automatically saved and compiled in the pinned post of our Patreon. And I'll immediately delete this one once this is finished. So, congrats to all of you watching this right now live. Okay, because this is really for Patreon members, no? Alright. So, last time, no, I discussed about price action. And now, diba? Price action, for example, like this one, maybe I'll just borrow this, Elliott wave, no? As you know, okay, price action is basically about trend and structures, no? If I may still continue, trend and structures. So, we need to understand what is the behavior, what is the current trend, and the structure of the current of the current market, no, in the chart. So this is just a quick recap, no? For example, from low, it goes high, then high, higher, high, higher, high, higher, higher, high, then low, higher, low, higher, low, higher, low. We have a what? A continuing trend. All right? And if you want to know where you are, for example, for example, at this one, no? For example, at this one, you know that we are on a what? But this is just an example. We are on a bullish trend by looking at this trend, bullish trend. Now, for example, we are at this point, no. So what we are looking for is the potential reaction of our chart in its structure. So what is our structure? Our structure is this one. So for example, this one. So we have previous high, it went low, then it breaks out of the previous high, it creates a new high, then it retraces or bounce to the previous high. So this is your structure. Okay, so there is a test or retest of structure. And of course, this is not just a single line. Usually what we have there is a zone. But if you want, usually people traders will just look at this as a simple line, but in reality this is a zone because we really don't have a specific single line for this one, for the structure, but instead, because there are what, up wicks, bottom wicks, some noises along the way, so that's why we have this you can see this gray rectangular bar. So let me remove this one. All right, and that's basically it, no? So the trend is uptrend. Our structure, we are currently at the support level. If we are just looking for a simple support and resistance, right, of this one, and we know every time that there's a retest of previous structure, usually there's some sort of reaction, and this is where we usually perform our technical or price action analysis, whether the price or whether our analysis will lead us to execute a trade, both either long or short trade. All right, since this is a support, our bias usually is for long. All right, whenever there's a test, usually our bias is the continuation of that one, not the breakout or breakdown of this one. All right, just in case, of course, if it makes a breakdown or breakout of this one, then we have a cut loss. All right, so that's that's a recap for the price action. And now, since as I mentioned, no, whenever there is a structure or break of structure or a test of structure, usually there is what, a bounce, retracement, or a breakout or a breakdown. If I'm going to use, for example, this one, all right. If it so happened that instead of that one, we have is consolidation. All right. What we have there is a consolidation instead of a continuation. So we don't know yet if the market will break out of this one or break down. No? So for example, it's at this level. So this is what this is going to be our topic. So as I mentioned, no, this break it could break this one, all right, break. And of course, we are looking for a retest, so that's why we call our webinar a break and retest. All right. So of course, this is definitely applicable if there's going to be a retest. If there's no retest, then there's no trade. All right. But if there's going to be a retest, what are the conditions that has to be met? No, in order for us to execute a trade. All right. And as I mentioned, so this is applicable for three scenarios. One is the continuing trend. For example, we have a high, higher high, higher high, and higher high, or low, lower low, lower low, lower low, or another one is a consolidation, and another one is for triangles, no? Ascending triangles or descending triangles. And of course, no, just right here, just in case you have questions, no, write in the comment section. Write in the comment section if you have any questions. All right. If we have non-Filipino viewers or participants right now, please let me know. Because kasi if we are all Filipino, I would rather speak in Tagalog na lang, no, in Filipino language. But anyway. Okay? Good. So for this one, no, so I mentioned, so we have three scenarios. So we have one is, I'm just borrowing this, a continuation trend, continuing trend. Okay? Another one is for, this is one. Okay? Another one is for consolidation. Another one is for consolidation. And okay, consolidation in 1, 2, 3, maybe this one, consolidation, then breakout, and of course retest. And I'll just put here our area of value here. So if you don't know what area of value is, just refer to our webinar last time. And of course, the last one will be the so if we have this ascending triangles, ascending triangle, wherein we have anyway, or a retest of that one. Then of course we have area of value here again. No? So of course, the important thing here is that, of course, we know, we are familiar with this structure, with this pattern, and of course, what are the conditions that has to be met, and in order for us to execute a trade. Okay. Let me focus now, at least for now, with because I already have an example for Luna. Okay, let's go to Luna first. Luna, and we have here maybe 1 hour time frame here for Luna. Sample for this one, 1 hour. All right. So with this one, let us focus on this. So I think we can have this as an example for our consolidation. Consolidation. So we have here price. Okay, price move down. All right. And after that one, it's forming a flag, and the flag usually that's a consolidation. Okay. So since we have this consolidation, let me remove this one first. What else should I remove? Let me remove this as well. Let me remove this one as well. Okay, so we will be focusing on this consolidation. So as you can see, as I mentioned, a consolidation is a repeated test or retest of previous resistance or support. So it doesn't matter, especially with consolidation. It doesn't matter whether the break will be breakdown or breakout. What's important is that once it makes a breakout, either up or down, what's important there is, what's this? Okay. Right. What's important here is once it makes a breakout, what do we have to see? Okay. and what do we have to observe on this one, and what is our conditions. So one of the condition that is required for this one is that there should be at least, diba, more than 2 test or retest all previous support or resistance level. So for this one, it tested this one, then twice, then thrice, even the support once, twice, thrice, and let's, for example, say, let's try to use the replay button. Okay? So we have this replay button. No? So for just in case you're wondering, no, I subscribe to TradingView. So this is one of their features, so that you can set your replay button for this one. Okay. Currently, the price, for example, at this one, at this actual point, the price is at this level. We don't know yet whether it's going up or down, right? We don't have an idea. So what we have to do is, alright, check whether it makes a breakout or a breakdown. And of course, since this is a continuing bullish flag, so bullish, we have a pole with a flag, so this is bullish. You could say most probably it's going to be a breakout, no? Upwards. Okay, let's play. Let's play. 1. Then 2. Okay, so it made a successful breakout of this one. Now, what's important to see is that, to notice or to observe is, when you have this, either up or down, is for you to set an area of value. The topmost of that one, and of course, the multiple touches of the body of candles. Alright, so we have this, as many as possible, no? But it has to be practical. Because if you say as many as possible, your area of value could be at this level, right? But as you know, so we are putting our area of value at the resistance level. So our area of value most probably with this one, because it touched this point, this candle, including this candle because of the top wick. Of course, this candle, so on and so forth. Nah? And after that one, what we should be looking for is a close of the succeeding candle that's going to make a breakout of its resistance and close above this one. Alright? It has to close above this one. Let me remove this sample of Elliott wave. Alright? Okay, so we now have a successful breakout of this one. Alright? With this one, we have a successful breakout of this one. What we will be looking for is, of course, the retest. No? So it could go as high as it wants to, of course. But definitely, we usually have some target. For example, our target could be at this level or at this level. Okay, I'll discuss that later. No, maybe on the second part of this video. But what we will be looking for after the breakout is for the retest of this one. It may take longer than usual, but sometimes it just takes 5 more bars, 4 more bars, or candles for it to make a retest. Sometimes it takes 15, 20 bars. It doesn't matter. As long as it makes a retest after that one, then that will qualify for our condition. So, after that one, what we have to do is to wait, right? So, wait for a retest. It has to touch this area of value. So let's play. So that's good. Alright, so we have this one. No? So it met our condition, the requirement for our condition. The condition is successful close above a bullish pattern with this one, which is a bullish candle, bullish Maruboso, and a retest. No? Unfortunately, with this one, okay, so it retested with this a very bearish candle. Okay, so what we need is, just in case if you're going to enter, is look for a good a buying opportunity or buying buying pressure on this one. So if you're going to buy, all right, you can, because we have three types of entries for this one. One is for aggressive entry, which is this one. For example, when there's already breakout and the next candle, you may immediately buy, but that's an aggressive entry. That's very risky. Okay, but you can still do that, right? The other one is wait for a retest of this one and wait for a buying opportunity, bullish pressure. Okay, buying pressure, maybe in a form of a long bottom wick a hammer, green hammer. It could be a red hammer as long as there's a buying pressure for that one. That's a conservative entry. And lastly, the last one is if you have to convert this into little lower time frame. For example, if you're using 1 hour time frame, you can convert this into 15-minute time frame. I'm going to show you. No? So if you're using 1 day time frame, you can convert it to lower time frame, to 4 hour time frame. If you are using 4 hour time frame, you can convert it to 1 hour time frame. If you're using 1 hour time frame like this one, you can convert this to 15-minute time frame. If you're using 15-minute time frame, you can convert it to 5-minute time frame. I'll explain later now why and what's the importance of that one. What's this? Okay. So for this one, if you are an aggressive trader, you can immediately buy, for example, here or even here, right? Once it retested, okay, our area of value. If you're going to do that, then of course the problem will be, if you're going to do that, then the problem will be your risk management, because you haven't considered all other activities inside of this one, especially if you're going to convert this into lower time frame, or you haven't seen any buying pressure, no, bullish activities on this one, or even if there's some buying bullish activities within, okay, the problem is that if you're going to do that, and that's an aggressive approach to this strategy, your risk to reward ratio, your risk, okay, has to be set below the latest structure. So you have this low, then you have this higher low, then you have this higher low, then you have this higher low. Your cut loss or stop loss level has to be lower than this one, especially if you're the type of trader that doesn't have time to observe the market. Okay, so for example, it make a breakout at this level, that's already successful. Then you will just set your entry, no, or your buy, your buy order, okay, at any point here or at any point here within this one. If you're going to do that, that's okay. Nothing wrong with that. All right. But the problem is, of course, there's a pros and cons, which is later I'm going to discuss. So if you're going to do that, yes. So you will have to set your cut loss below this one. And of course, once you have this cut loss, you should have at least, because with this one, the win rate for this kind of strategy is only at around 40%. If that's the case, you have to set your reward to at least 1.8 to 2 level. No, you have to have a risk to reward ratio of at least 1 to 2. The problem is, of course, for example, if your potential limit will be, for example, will only be at this level, then if you're going to check, you will only have at around 1:1 risk to reward ratio, no, which is not good, because your chance of winning or win rate with this kind of approach, with this kind of entry, is only 40%. So, for example, if you're going to execute 10 times, no, you will only, by statistics, you'll only win 40%, and you're only winning 1:1, then you are still losing, no? You will still be losing 6. So, you will only win $4, for example, then you're going to lose $6. What I mean by risk to reward, so for example, if you're going to execute this kind of entry or this kind of approach, that's okay, as long as, for example, you can see that, this could be a good exit point, because this is our previous support level, which could be our resistance, which is the resistance of this one. Then let's see, no? Okay, if we will set it at this level, then we have a good risk to reward ratio of 1:2.5. That means 40% of the time I'm going to win this one, okay, by statistics, win rate. So if I'm going to lose 6 times, I'm only going to lose $6. If I'm going to win 4 times, then since this is 2.5, I'm going to win $10. So with this approach, okay, so if I have a 1:2.5 risk to reward ratio, then you can do this, no? You can execute this kind of strategy because you're going to win $10, you only lose $6, so you're still winning $4. Okay? But of course, that will depend, no? For example, if this portion or this area of value has been proven for several times already, for example, okay, previous resistance, previous support, and if we can extend this line, try to extend this line. It's not here. Let me get it from here. Okay, at that one. So, we'll just have to check, no? Has this area of value been tested for several times? It has been tested here, here. There's actually a breakout at this level. That's really good. Previously. So, most probably we can say, okay, if I'm going to enter at this point, all right, then maybe I could set my exit at this level. I have this risk, all right. So that will be okay. But of course, we all know, no, the price didn't hit this level. I think the highest was at this level. So what happened is that you only have what 1:2, no? 1:1.25 risk to reward ratio, no? If I'm going to play. So what happened is that, so I think, no, we only hit that one. We didn't hit this level, no, this part. That's still okay, but we can say technically that is 1:1, no? But if we knew, for example, that this is going to be our limit, okay? This level is going to be our limit. Instead of this one, the limit will be okay, and we still proceed with our trade. We know that, diba, in the long run, we're going to lose because win rate for this kind of approach is usually just 40%. So we win, we will win, we won on this one because we hit our target if we knew that this is the limit. But that's the first, for example, and 10 out of, we repeat it by 10, so we only have around 3 more winnings, no? And we're going to lose most probably 6 times, no? So in the long run, we will be losing a lot, or we will be losing with this kind of approach. You're only going to do this just in case you're able to identify that most probably, okay, the price could go at this level, all right, and that you are convinced that it will go at this level. So for example, it didn't happen. That's okay. It only reached this level. Then of course, whenever you already have this one, you already have what 1:1. What I'm always telling you, no, I'm always reminding you that once you already have that much of a profit, for example, how much is that? I think that's 5% or yeah, around, right? So that's already around 7%. So worst case scenario should be you should put your exit at the break-even level. If you are not fond of selling half, selling 10%, selling 25% to secure first some of your profit, then once a price goes back, right, drops down to lower level, then hit your trail stop, all right, at least you've already secured some of your profit. But if you're not fond of that one, it's okay. You already have 7%. Be sure to set your sell order or exit at the break-even level. Okay? Because the most important thing for us in trading is capital preservation. Right? Once you have that capital preservation as your number one priority, you're already one step closer to your goal, which is all about profit. Right? And let us just proceed with this one. Proceed. As you can see, okay, so we hit our cut loss, no? So this is what I'm telling you. So, for example, if you thought that, okay, based on your analysis that most probably the price could go up as high as this level, and you have a risk to reward ratio of 2.5, that's okay, no? So, well, that's what your technical analysis said, no? So that's only games of probability and odds. Okay, so it only managed um, to, to reach this level, 7%, or made a double tap at this level. Okay, it didn't happen. So, you should immediately set your exit at least at the break even, or, okay, especially, for example, especially or here on this one, if you're going to apply the double tap pattern, okay, which is going to be our next topic, no? So you notice that it's having difficulty now to break out of this level, okay, but maybe that could be just temporary, because what you're going to do is, if this is in 1 hour time frame, you're going to convert this into 15-minute time frame. That could be just a temporary. Then once it makes a retest of that one and having difficulty, then you have to decide, should I sell 10% of everything, 10%, 25%, or sell half? Then set my exit at the break-even level. So I already secured 25% of my profit or 50% of my profit. Or, okay, so I will ride this one until I get my 2.5 reward. But if I'm going to lose, I'm just going to be break-even. No? So you have to decide on that one. Okay, so this is as an example of our example of our breakout and the retest of our consolidation, since this is in a 1 hour time frame, as I mentioned. Okay, so if you're not going to convert this into lower time frame and this is your approach, then as I mentioned, it's okay. Set your cut loss at this level, below the previous low. Okay, this is the most aggressive approach, no? If you're going to enter a trade, breakout, then retest, then just look for a buying pressure. So this is a bullish candle, this is a bullish candle, and if you're going to buy at this level, all right, because that is where you made your entry. Then if you have a good risk to reward ratio with that one, so 1:1.58, that's still good, no? In the long run. So if you're going to win 4 times, then you're going to win 6, and if you're going to lose 6 times, you're going to lose 16 as well. So you are at break even if you have a 1:1.5 risk to reward ratio. All right, so if you will use this kind of approach, that's okay, right? Now let's go to the conservative approach. What's the conservative approach? Okay, that's the aggressive approach. You just have to set your order there and set your cut loss at the previous low of your structure. The conservative approach is to break this into lower time frame. Since we are in 1 hour time frame, we will use 15-minute time frame. Okay, so you will see that it changes dramatically, no? So if you're going to use this approach, unfortunately, because for example, the price already retested this zone. Okay, what we will be looking for is what? A buying pressure, no? Buying pressure. Unfortunately for this one, okay, the buying pressure or bullish signals or bullish candle was at this level. Just example, for example, what happened is that instead of that one, what we have, for example, instead of that one, we're able to get a bullish candle at this level, then we will have a good risk to reward ratio. For example, you entered at this level, all right. Now, since you broke it down into lower time frame, you no longer have to use this as your stop loss level, no, as your basis for stop loss level. We will have to use, if you attended our webinar about ATR, your true value, true range. So you will know, try to apply ATR here to set your cut loss. So you will have a cut loss, okay, just a little bit below of this one using the ATR. And of course, with that one, as you know, with this kind of approach, no? Okay, the previous one, okay, right, okay, let's go back here again. So with this kind of approach, we will have a win rate of about 50%. So the previous one I mentioned, the win rate for that one is about 40%. With this one, it's it's a 50% win rate, no? So for example, So with this one, just in case, what you want is 1:1, okay, win rate ratio for this risk reward. Then of course, if you're going to win 5, you're going to lose 5, then you are at break even. But the good thing with this one, our target now is much smaller, no? For example, previously, this is our target, no? Our target was at this level, 1:2.5 at this level. I remember this one because, actually this one, no? Because I put a horizontal line at this level. Okay? You can see now the difference. Instead of because previously our cut loss is at this level, so we have a 1:2.5 risk to reward ratio. Since we convert this into lower time frame, from 1 hour time frame to 15-hour time frame, we no longer have to use this as our basis for our stop loss. We're going to use the ATR indicator, and most probably our cut loss will be at around this level. With the same target, you can see we drastically increase our risk to reward ratio. But of course, usually with that one, our immediate target will be the usual double top or previous high or previous this one structure. So as you can see, if this is going to be our target, okay, let me just put it. So still with 1:1.5 risk to reward ratio, we no longer have to have a big target. Previously, it was at this level. Our target will only be at this level, and we still have what? 1:1.5 risk to reward ratio. Again, if you're just going to bet $1, okay, you're going to lose $1 every time with this one, and you're going to win $1.53, right? And of course, if it happens that you will reach this level, okay, that is 1:2, almost 5, or at least the actual actual chart, this one. So this is 1:2.7, okay. But a while ago, as you know, our risk to reward ratio was about 1:1, almost 1:1, or 1:1.2. That's still okay, no? So you can see the big difference with this one. So if we have our cut loss at this level, then we have about 1:2, more than 2.5 risk to reward ratio. Then we will be stuck at this level. And of course, you already have about 1:2.5 risk to reward ratio, okay? Especially that there are several signs already telling you that market is having difficulty to reach your target. Then you have to decide. You may sell all, you may sell half, or just sell 10%, 25%. It's all up to you. But the most important thing is that when it reaches back to your entry level, set your exit a little bit higher of this one, at least to include your gas fee or transaction fee for this one. And with that one, you will, okay, if you sell 50%, so you've already pocketed 50% of your profit with this approach, right? Okay, that's the conservative, no? The most conservative approach for this one. Unfortunately, we don't have it here. But let me see. This is going to be just an example, because usually, what we usually look for this one is a simple inverted head and shoulder pattern or a double bottom pattern, right? Actually, this may qualify for a double bottom pattern. 15 minute, so I'll have to convert this to 5-minute time frame. Of course, because of the time difference, no, or the time frame difference, there's going to be a greater risk. But the important thing here is that even though you have a greater risk for this one, at least your loss is going to be minimal. So, because unfortunately we didn't find it here, no. Because usually what we would like to see is a test and retest of this previous one, and we will have a double bottom with this one, and we will be talking, or we will be have a training course about a double bottom and inverted head and shoulder. For example, if it so happened that we have this and it tested this part, again, this is just an example, okay? So this is a sample of that one. I'm going to discuss this in detail. if it so happened that we have this, right? Um, right. Oh, no, not that one. Uh, another one. One more. Because we don't have a magnet, no? So, let me use the magnet. So, of course, body of candles and the lowest bottom wick. Right. Okay. If it happened that, for example, this candle retested this level, alright, and after touching this area of value, it could cross or go beyond our rectangular shape or box, but the candle has to close above the box or within the box or above the box, then that qualifies already to for our double bottom. Then of course with that one you will have you will have a smaller stop loss level with this one. And of course the good thing is that, okay, instead of your entry at this level or even at this level, your entry is going to be what? The breakout of this lower box, smaller box, once you have a confirmation of bullish candles, bullish patterns. It could be a hammer, green hammer. It could be a bullish Maruboso, things like that. So your entry is going to be, for example, at this level. Then your for example, we'll still have a same a stop loss level. As you can see, now with this one, we already have what? 1:5 risk to reward ratio. Okay? So you see the difference? This is the most conservative one. The problem with this one, okay, for example, in the most aggressive approach entry, wherein you will just set your entry order, you may be having about 50 trades per month because that can happen quite often, right? Breakout, then just retest, then set your by order, then set your stop loss at this level, then set your profit at 1:2, 1:1.8, so that you'll have a good risk to reward ratio in case of what in case of what do you call this, because the win rate for that one is only 40%, right? So you should have a risk to reward ratio of about 1:1.8 or at least 2. The second approach, the conservative one, is okay. So you'll have to convert this into lower time frame, which is 15 from 1 hour time frame. You convert this into 15-minute time frame. Then enter at the next bullish candle. At least even within the area of value, you can do it. The win rate for that one is usually 50%. That can happen, or with that approach, you will have around 20 trades per month with that approach, because usually it doesn't really happen that often. And the last one, you convert this into lower time frame and look for bullish patterns or bearish pattern if you're shorting, right? And apply this methodology. As you can see, no, it didn't happen. So if this will happen, if this candle retests this level and you have your area of value here for the double bottom, then your entry level is going to be much lower. Then you will be having a better risk to reward ratio. But unfortunately, with that one, you will be having maybe 5, the most is 10 trades per month. But of course, no, we have hundreds and hundreds, I think thousands, no? But we can say hundreds of coins, right? Especially in crypto or in forex or in stocks. Then, okay, just screen, no? Just screen. And of course, you have to apply this to the most liquid, right? Don't apply this to the illiquid stocks or currencies, no? Yeah. Okay. So this is sample for a consolidation. I'm going to proceed now to our example for triangle. But let me know if you are or if you have a question. Okay? Gumagamit ka ba palagi ng ATR sa stop loss? Hindi lagi, no? That depends. Depende sa approach. Sometimes if I'm using this kind of approach, then I will have to use ATR. But since I'm already a bit familiar, no, because of experience, no, yung we call it sa Tagalog, mamatahin na lang natin, no, we will just estimate because based on experience, then I no longer have to use ATR. I will just have to, based on experience, I would know that most probably our stop loss will be somewhere at around this level, okay, because of the experience. But if you don't have an experience yet, of course, you have to use ATR for the stop loss. VUR, sabi ni VUR, FYI, more power, sabi ni Miller Ryan. What else do we have? Parang straight English na ngayon, ha? Straight English na. Mas madali kasi mag-straight English kapag nagtuturo lang kaysa yung nagdi-discuss talaga ng ano, no? Kasi parang ano yun, nakakahon na yan. No? Anyway, sorry for speaking Tagalog. Okay, what else? Anong dapat time frame for breakout? Okay, so for breakout, no, you can use different time frame. This is applicable to all time frame. If you are using 1 week time frame, then for example, if you're using 1 week time frame, then you just have to check, no, the graph in the 1 week time frame. Then you may convert it into 1 day time frame. If you're using 1 day time frame, let me put it here and maybe take a screenshot, no? Take a screenshot. What else? Dami ko nang sinunod dito. Ayan. Just take a screenshot, ha? So I'm going to put right here. Alright. So for time frame, if you are using daily time frame, you have to convert to 4-hour time frame, right? If you are using a 4-hour time frame, 4-hour TF, no? I use a TF time frame. Then use 1-hour time frame. If you are using 1-hour time frame, time frame, then use 15 minutes. And of course, if you're using 15-minute time frame, then use 5-minute time frame. Okay, and of course, no, 5-minute time frame, you use 1 minute TF. Alright, and of course, sorry for that one, sagad na natin, no? For weekly TF, then convert it to daily TF. Why is it in bold? Okay, I'll convert this. Yan. Take a screenshot, no? Screenshot para easier for you to recall this one. Okay, good. So that's our sample for that one. I think we have one more example, no? For the continuing trend, because our sample was for a consolidation. Okay, consolidation. Let's proceed to continuing trend. Do we have it here? Maybe let me convert this into 15-minute time frame. And of course, no, next time I'm going to show you samples of unsuccessful trades, no? So we will not just be focusing on successful one, but I'm going to show you samples wherein we apply the strategy, wherein conditions are met, no? We made our entry, or there's an entry opportunity, stop loss and everything, but still the market, no, goes the other way. Then there's nothing we can do with that one, because as I've mentioned, no, for the aggressive one, usually the win rate is only 40%. For the conservative approach, the win rate is 50%. The more conservative approach is about 60%. Okay, and if you are a disciplined trader, then you should be execute, right, either the conservative or the more conservative approach, no? As much as possible, if you can, try to avoid the aggressive approach. So where is it, no? I have a sample here for continuing trend. I already marked it, but maybe I think it is this one. Was it this one? Anyway, next time, no, I'll give a good example for continuing trend. So we will now go to our Bitcoin. All right, sample. So this is the one that I posted this morning. No, so where is it? I posted this morning wherein I advertised that we will be having a webinar for today. Okay, so again, this is it. Let me put this back. Right. So, here. No? So, posted about 8 hours ago or 9 hours ago. And the breakout strategy, so we will be featuring Bitcoin. So, during the time, the screenshot, the price was at this level, no? So our bias is if there's going to breakout, of course. If there's no breakout, then immediately, no, there's no trade on this one, because most probably what's going to happen is just a simple retest of this one and the price will drop or retrace. But if there's going to be a breakout, then we will apply, okay, this strategy, or we will observe and try to check if our conditions will be met. So as you can see here, no, this is the aggressive approach. If you apply aggressive approach, once you have a breakout of this one and you want to apply the breakout strategy, using the aggressive approach, then just wait for a breakout, then a simple retest, or even not a retest, for example, it just close above this one, then you can enter at this level. As I mentioned, our cut loss should be at the most recent structure, which is this one. The basis is going to be the recent structure, which is this one, and it's going to be just a bit below of that one. And with that one, you will have to check your risk to reward ratio. Our immediate resistance, as you can see, is at this level. Then we will have to check if this level was tested several times. Okay, since we know that our risk will be at this level, then upon checking, we only have what? 1:1 risk to reward ratio. Okay? We should not force our risk to reward ratio. Okay. RBT mentioned, no, that in the webinar that if you are going to execute the aggressive approach, you have to have at least 1:1.8 or 1:2 risk to reward ratio. Okay, so I have to set my reward at this level. No. Okay, you have to be, diba, realistic. If this is really the strongest or immediate strong resistance that you can see, there's no way around it. No, you really have to set your reward at this level and check if are you okay with 1:1 risk to reward ratio with this one. If you're going to ask me, of course not, because I already mentioned that with this kind of approach, we only have what? How much win rate do you have for this kind of approach, diba? Pakilagay na lang. Pero of course, you know na, no? It's only 40%. Okay? So 10 times, diba? If I'm going to execute 10 times, I'm only going to win 4 times. I'm going to lose 6 times. You only have 1:1 risk to reward ratio. So why bother executing this kind of trade? If I'll be able to find a way to enter at a lower level and have a better stop loss level, even though my target will only be at this level, then that will be okay. For example, instead of my entry at this level, of course, definitely with this approach, okay, so we will not be using that. So I'll go with the conservative approach, which is what? I'm going to convert this into lower time frame, 15-minute time frame, then look for positive or bullish candles, patterns, right? signals, informations that I can find to enter at a lower level, even inside, okay, even inside of this area of value, right? So instead of my entry at this level, my entry is going to be could probably be inside the area of value, and instead of my stop loss at this level, I will have a higher stop loss. If that's going to be the case, so what will happen if this is still going to be my target, right? So definitely we will have a very favorable risk to reward ratio. Most probably if your entry will be at this level and your stop loss will be at this level, exit, the same exit, most probably you'll have what? 1 is to 2.5, 1 is to 3 risk to reward ratio, right? And of course, bonus na lang, no? It's just a bonus just in case if the market will still continue, no, to move upward after that one. But of course, we have to be realistic, right? If our bias based on some information that we're getting in the chart is that most probably there's market could go up and go north of a 40,000 level, that's okay, but we have to be really realistic. It says here entry at around this level, exit stop loss at around level. You have a good risk to reward ratio here, then that's it. Now if that's your target, upon entry at a lower level, stop loss at a lower level, the price reach, for example, 39 level, you have a good 1 is to 3 risk to reward ratio, then you may sell half, then leave the rest. Maybe the price could still continue to move up, and set your cut loss at the break-even level, right? So let's proceed. Let's see what happened. All right. So this is it, no? If you're an aggressive trader, right? If you would execute an aggressive approach, for example, right? If you entered, if you just set your entry, no, without looking at this one, for example, you're busy, you just set your buy order, and for example, you set your buy order at this level, then it hit, no, your buy order, right? And I don't know yet, no, so maybe I'll put here, or maybe I'll adjust this one, okay, up to this level. Let me check if we really have a series of tests, no, at that level. Do you have? How many times was that level tested? So with this one, so most probably we still have at around that level. So we could have a even higher, or at least multiple touches at this one. So there's a chance that the price could really go beyond our initial target. All right. Yeah, but okay. So what we have is that one. So we only have this level. So most probably we can adjust it up to this previous resistance, and support. Okay, and we have this one. We touch this part as well. This is too high. We touch this level. Okay, so if we're going to use it as our basis for our target, okay, and we have this aggressive approach entry. So you entered at this level, then your target is could be at this part, or at this level. Then you have a good 1 is to 2 risk to reward ratio. Then you can execute this one. It's up to you, because you have a good risk to reward ratio of 1 is to 2. This level has been tested several times, and we have a pause at this one, and test at this one, okay, and so on and so forth, right? But of course, as I mentioned, no, this could be a more realistic, but just for the sake of giving an example for this one, right? So if you entered at this level, then I mentioned, no, your last structure was at this point, was at this level. Then you may have to adjust it a little bit below this one. Then you have a good 1 is to 2 risk to reward ratio, 40% win rate for this one. Then that's good, since you have a 1 is to 2 risk to reward ratio. Then that's good. That's it, no? And fortunately, so just in case if that's what you're doing or what you did, So, you entered at this level, the price is still at this level, so you are still on a positive. Okay? But as you can see, no, there's a much better approach for this one. Let's see the other better approach, right? Okay. That's the aggressive approach. Again, no, so sorry for that one. So with this one, let me go back again. So this is an ascending triangle breakout strategy. Let me remove this. Ascending triangle strategy. What's important is that we have support tested several times, or we have series of higher lows, higher low. Then at least our resistance has been tested at least 2 times, no, minimum of 2 times. Because once we connect that one, then that's going to be our resistance. Then actually we have it when posted, it was at the 3rd test, no, at this one. All right. So that already qualifies for our pattern wherein we can apply the breakout strategy. Okay. So I discussed already the aggressive approach. Now let's go to the conservative approach. The conservative approach could also be using the same time frame, just in case it made a retest, and after that one, right? If this is already enough for you, you have this. Okay, you can even convert this into lower time frame, but at least for now, let's just put it as it is. So we have a bearish candle here, and what we're looking for is what? A bullish or buying pressure after that retest. So it made a retest of this area of value. We have a good hammer type green candle with this one. We have a long bottom wick. So the bottom wick shows buying pressure. So if you want to buy at this level, then that's okay, no? So you want to buy at this level, that's already okay. Since okay, so you already you buy at that level. Since your reference is this level, and you bought at this level, this is going to be now your reference using ATR. But of course, for me, for experience, you will set your stop loss lower, okay, than this one. It can be a little bit lower if you're not going to use ATR, as long as you have a good risk to reward ratio. Once you have a good risk to reward ratio, then you may not need to, even if you're going to use ATR. Okay, so upon seeing this one, okay, so you said that, okay, most probably this is going to be our TP. It will give us good 1:2 risk to reward ratio. But in reality, you see that there's really this this level consolidation or a traffic at this level, and of course you're going again to look if this level has been tested several times. But let's just say, for the sake of argument, no, for the sake of discussion, you set your for example, you set your reward at this level. Okay, so with that one, no, you can see you have what? 1:4 risk to reward ratio, or instead of that one, so you have different approach as well. So you already know, you already entered at this level, you already have your stop loss with that one. Your initial target was to have a risk to reward ratio of at least 1:2. Try to check where will your 1:2 will land. No? 1:2. So your 1:2 will land at this part, at this level. Okay, and you have at least in the multiple touches of this part, right? So if this is what you did, now conservative trader, you entered at this level, you hit your 1:2 target. Okay, so the rest is up to you. You can sell half, sell all, you can sell 50%, 10%, and set your break even, or your exit at the break even. No? If the market will continue to move up, then that's just a bonus. Alright? Then that's just a bonus. If the market will continue to move down, or for example, that's already your target, right? And we know, usually, especially you know the volatility of the market. So if it makes a retest of this one, for example, you already sold all because you already have 1:2 risk to reward ratio, right? Your $1 becomes $2. Then once it makes a retest of this one, then you apply the bullish pattern. Could be an inverted head and shoulder. It could be a double bottom pattern. It could also be what, a harmonic pattern. Then you can buy at a lower price level at the retest, then execute another one. Okay? So as you can see, as simple as this one. So we haven't changed yet our, or converted yet our time frame. No? So if you entered at this level, you have a very small stop loss level, or near stop loss level from your entry point. Okay, so just in case, at least you have this and you have a good risk to reward ratio, then that's all right. All right. And of course, the most conservative, if we will be able to look for a better entry opportunity and a better stop loss level using 15-minute time frame, we have to convert to 15-minute time frame. If it so happen that we have, then we can do it. Na? Unfortunately, we don't have. Usually because what we're looking for is a double bottom approach, or a double bottom pattern. We only have that one. If you want it still further with that one, since you only have that one, you can convert this, because you convert from 1 hour to 15 minutes, then 15 minutes to 5 minutes, right? So you already have here what, series of double bottoms, right? So if you're going to use this as your basis, what you will have to look for is what? So for example, that's your basis. So body of candles, then bottom wick. So the double bottom will be, the condition will be, the next candle should at least touch the area of value, this one. So it actually touch, cross it, and even goes beyond the area of value, but the candle actually what? Close above this one, right? So since you have that one and you only have this, upon closing of this one, you entered at this level, then this is going to be your basis for your stop loss. Then you will have your stop loss below that level. So if this is your entry, right, then you will have a better stop loss. You can even make it 1:2 or 1:1.5. That depends on your ATR. For this one, for example, let's make it at least double. You have this one whole candle and another equivalent for this one. Your enter is at this level, right? Then, again, with that one, as you can see, no, even if we are still within the area of value, we already have what? 1:2.5 risk to reward ratio. So you may, if you want, use the previous, at least the multiple touches on this one, right, as your reference, no, for your exit, or at least TP1. As you can see, there's already what? 1:5.22, right? Risk to reward ratio. So with that one, you may adjust now your risk, at least 1 instead of 1:4.5. Then that will be okay. Or of course, use your ATR, right? And let's see, no, the highest so far was at this level. Okay, 1:7.3, right? So you can do this approach. This is the most conservative approach. And of course, unfortunately, this doesn't happen all the time. And of course, okay, the market could go the other way. You entered here, right? You've seen a double bottom with this one. And of course, this is just a 5-minute time frame. Then this could be just good for another series of candles in a 5-minute time frame. Then after that one, the market could go down to complete this these aggressive candles here. Then you will hit your stop loss. So that's why, even though we have this, right, since this is just a 5-minute candle, once you have your what, 1:1.5 or even 1:2, because since this is practically within the area of value, so once you have your 1:2, 1:1.8 something, then you have to protect your of course, preserve your capital and at least secure some of your profit. So you already hit the 1:2, right? Risk to reward ratio. Then secure what? 10% of your profit, 25%. It's up to you, right? Then let the rest to ride the market. If it wants to go up, if it wants to continue to move up, as long as it wants, you already secured portion of your profit, and of course, you have set your exit at the break-even level. This is the most conservative type. For this one, usually it happens only what? You will only be able to have about 5 to at most 10 trades per month. For example, the conservative one, the one wherein you will not convert or you will not use this approach, you will just look for bearish signals. For example, instead of this one, you will buy at this level because at this point, you already have what? Good bullish indicators, signs. You have a test of the area value. Now it's just a retest. Then there's a lot of rejection from the sellers. So you have lots of buyers here. So you will enter at this level. So this is the conservative one. It has a 50% 50% win rate, and of course you'll be able to have about at least 20 trades per month with this kind of approach. Okay, with this kind of approach, with the double bottom one approach, you'll only have about 5 to 10 again, and of course a better win rate of 60%. And of course, if you're going to be aggressive, enter at a higher price level, just set your buy order. Okay, your win rate will be reduced down to 40%. So you will be needing what? At least 1:1.8 or 1:2 risk to reward ratio. So your entry most probably will be at this level or at this level. Then your cut loss will be at the previous, as I mentioned, as a previous support. So let me see the previous support at 15 minutes. Yeah, this one. Then it's going to be much higher than that one. So we marked it a while ago. Yeah. So 1:1.6, then that's already okay. But as much as possible, 1:8 or 1:2. Or as much as possible, avoid. Alright. So that's it, no? Our webinar for tonight. I will have a part 2B of this one. Sorry, I wrote in the title part 1A, but it's actually part 2B, no? Sorry for that one. Alright, so this is it. Let me know. Do you have any more question before I end this one? And for our next webinar, I'll be giving you more example. So maybe a lot of you were excited, no? Okay, so just look at this one, no? For entries, for aggressive, our win rate is only at around 40%. You can have 50 trades for this one. But as much as possible, let's do the conservative or the least. Sorry, not least conservative. Sorry, it should be the most conservative. Let me change this one. Settings. Most conservative, sorry, least conservative. This should be most conservative. Alright. 50% win rate for the conservative and 20 trades per month. And for the most conservative, about 20% win rate. But it may not happen as often. So you may have just about 5 to 10 trades. So sa futures, okay lang mag-trade? Yes, okay lang as long as practice trades. Mas okay nga yun no? Just do practice trades. Don't trade real money for now. Especially if you're still learning or still studying our training courses. Because my requirements, no? It's only for those who want, no? If you're studying our courses, continue studying our courses. Watch 2 to 3 times per video. No, do not skip the videos. Then apply what you learned from the courses and perform 1,000 practice trades. Okay, you can do virtual trade. No, at least the thing is, at least you need to get familiarized, no, with all the different scenarios. Whenever you have a pattern, whenever you have this structures, price action, everything, at least you already know what usually will happen, no? With this one. I'm not saying 100%, but at least 55% of the time, 60% of the time, this is usually what happens, no? Once you are already familiar with that one, once you already perform practice trades, 1,000 practice trades, by the time you apply, no, or you execute using real money, at least the effect or impact of emotion or being an emotional trader, it will have lesser impact compared if you're immediately going to execute real money trade. Because, for example, this one, right? You already know, you already entered here, you already execute, you already sell half of your profit, you already set your TP at this level, okay? So you will not be that more, you won't be affected that much, no? Of the price movement because you have your strategy, you already execute your strategy, di ba? And you're just following it. But if you don't have any idea, for example, because of luck, you're able to enter at this level without knowing anything. The price is already at this level but since you thought that price could still move up to this level, so you just let it ride, no? You just made it continue to move at you just let the you just continue to hold your position. Then after that one, the price went back down to this level and most if unfortunate may hit your cut loss or stop loss level. So you've been earning already, right? How much you entered? Let me remove this. You entered at this level. Okay, you were already earning when the price reached this part, and of course you have a good risk to reward ratio because your cut loss will be closer to your entry level now because you change it into lower time frame. So you already have a good risk to reward ratio. When it hit this level, but you didn't exit, you didn't sell half, you didn't sell all, everything, and the price, unfortunately, if it will move back to this level, then you will hit your cut loss or stop loss. So instead of winning 200% of your bet, now you will be losing your capital. Okay? So I didn't discuss this to tell you that the market, okay, I think some of you were expecting that I'll be discussing whether the market will continue to move up, to be bullish, everything like that, no? So that's not our focus here. Our focus is how can we take advantage of, okay, this kind of patterns whenever we see this one or consolidation or a continuing trend. If the market will continue to move up, then that's okay. Yeah, that's good. But what's important is that we know what to do when we see this kind of a pattern, apply the strategy. Once you have a good risk-reward ratio, be sure to exit or pocket some of your profit. At least zero risk, meaning you're already earning twice of what you bet. Then set your exit at a break even, right? So that's already zero risk. Good, thank you so much. So this is going to be recorded. So I don't know about your question, TA exercise. So this is a training exercise, training course. So this is free for everyone, but I'll be deleting this copy this week. So because this is really for our patron, no? So for our exercise, let me check if we'll have a new exercise. But our focus here is this training course. Do you have any question about this one? Uy, congratulations to our 51 viewers. No, because this is highly technical, so ibig sabihin na you're really interested. Because usually whenever we talk or discuss about technical matter, no, so there's really not much interest, no, from our viewers. But the fact that we still have 50, then that's a good sign. Because I know most of you are just interested with what? The TA exercise. Laging kata, TA exercise ba tayo, no? So this is their interest, no? Hopefully, your interest is to learn this one because whenever we have the technical analysis exercise or trade plan exercises, these are the things that you have to observe on those and you have to execute or apply on this one. No? Although we have what? Entry point, a stop loss, everything. But if the chart is already saying, most probably, it's already showing us bearish information and everything, no? So instead of entering, then maybe you should wait, okay, or apply what you've learned in this one, or avoid it totally, no? Because we don't know what the market will do, right? What we can do, for example, this one. So I will post this one. So most probably our entry will be at the retest of this one, at that one. Now, learning that we have 3 different approach for this one, then it's up to you to choose, no? Decide, do you want now to enter, or did you enter when it just simply made a retest at this level, right? And of course, since it made a retest of that level, then this could be your lowest structure. Then you will have your stop loss instead of, because previously your stop loss is at this level, then your stop loss now will be below of this structure. Let me remove this one. Below of this structure, no? Because we have a series of high, low, higher low, higher low, higher low, then higher low. So this is your latest higher low. So instead of your cut loss at this level, so you will have your cut loss now at this level, right? But still, this is what? An aggressive approach for your entry. So with this, as you can see, if the price will retest this previous top wick, you will only have what? 1:1 risk to reward ratio because of this one, right? So it's up to you, no? So I can give you different, lots of ATA exercises, right? But it's up to you to analyze, perform analysis, whether or not, diba? When or where you're going to make your entry, stop loss, and depending on what's happening in the chart, right? And of course, everything may be, all the conditions may be met, everything is already okay, but if the market will really want to make a reversal, okay, or go the other way around, there's nothing we can do. That's why we have stop loss, right? If we are certain and 100% that our technical analysis or price action analysis will materialize, then there's no need to set a stop loss. Okay, as simple as that. Let me know anymore. Okay, so thank you so much. Thank you. VUM. On Turf Futures, okay lang mag-trade. So I already answered your question, no? If it's okay to trade in futures. Okay. So thank you so much. Tonight Wednesday. Let's see if we can have a day exercise. Let's see. But I'm just gonna discuss this later na lang, no? For this because we have an ongoing with trade plan for Luna. All right. And let's just play this one out. Okay? So actually, right? So the price actually at this level. So we are still looking for possible completion of this one down to this level, even down to this level. But as I mentioned, no, we were given multiple times already. First, of course, the first was at this level, and the price when I think Gartley or bat pattern was completed, the price dropped down to 5618 level. Okay, so that's a good profit already. So it didn't reach our TP at this level or even at this level. It continued to move up. So what I always tell you, whenever you have a good profit already, right? How much is that? If you were already earning how much when that was completed, or at least it already had a total swing of at least 4%, or a total swing of 6%, right? Maybe you say because you're able to enter at a lower price level and exit at this level. So at least you already have a good 40%, no? Profit at this one. If you have a good risk to reward ratio with this one, you already have what? 1:2, 2.5, then sell portion of that one. So if you sell at least, let's say 10%, you bet $10 with this one. You sold 10% when it reaches 1618 and you exit at a little bit above of this one, you sold 10% a little bit when it reaches this level. That's about, okay, so so you already secured $1, no, $1. Then set your exit at the break-even level. Okay, so at least you already preserve your capital and you already earned what, $1, no? $1. It could be, di ba, $100, then you secure $10. If you sold 25%, then 20, that's $25. And of course, if there's another opportunity for you to enter, you have this zone multiple times, it touches this level, it may continue. I took a screenshot that there could be a what was that? Another Gartley or butterfly pattern. I forgot. So if you entered at this level, no? So you're given multiple opportunities. Again, no? So if you haven't entered here, let's say you entered here, so the you were already given about what, 13% profit, no? So that's already good. So if you want, secure your profit. If not, at least when price goes back again, sell at a break-even level. If you haven't entered at this level, as you can see now, instead you're having what, a high, lower high, lower high, lower high. Then you can enter at this level. Diba? How much is that again? About 10 13%? Or at least 10%? If not, if you're able to enter late, I think this was this morning, January 26 to in the morning. So if you entered here, that's another around 10%, no? So I don't know if this will materialize, yes or no. So, right? For now, it's still performing what? Lower low, lower high, lower high, lower high, lower high. So everything is still good up to now. So the price again could. So here, so what can happen is that you can have a structure here, tested several times. If it makes a breakout here, you may apply what you've learned so far. Or if not, if the price will continue to move down, then it may complete our what? I think we started from here. So let's just put it here. So this is definitely a what? Gartley pattern, and it could be a deep Gartley pattern, or even at this level, no? At this level. Okay. So I don't know if that will happen or not, if that will materialize or not. But as I mentioned, what's more important is your risk management, capital preservation. You were already earning, diba? Here, here, here. Okay. Okay, so it's up to you to protect your capital or at least to secure some of your profits. What else? So any more questions before I end this one? If we have any more questions, so let me know. So as you can see here, without this one, I plot this and we have a completion of a regular Gartley pattern, no? For this one. And we have a simple AB is equal CD of this one. There's a bit of a discrepancy, but still okay, no? So, as you can see there, no? There's just a bit of a discrepancy. So, we have an almost exact AB is equal CD. So, it was completed at this one. So, that's why there's a reaction. And now we're experiencing a move upward of that one because of the completion of this level. If this will hold, then most likely there's a chance that it will continue to move down to our target level or even lower to reach this level at 52, and it may perform the deep or at least a regular crab pattern, no? A regular crab pattern with this one, and it will coincide with the completion of this pattern as well at down to this level. And of course, if not, then the market may move up as if it wants to, na. So that's why. So just check. We may be having a what, 1, 2 triple top at this one. We don't really have that break, that build up going to this one. So you may want to consider if you're going to enter or re-entry, or of course apply if you're going to see what an inverted head and shoulder here or a double top pattern at this level. Double top is going to be most likely this one. Although this is an area of value, double top could be if we're going to just consider this one. We're going to consider this, and that's our double top, body of candles. Then see if once the price move up, if it's going to move up, or we don't know if it's going to move up, but if it's going to move, continue to move, and it's hopefully it's a parabolic, no? When it moves up there, even if it crosses the gray box or our box, as long as the price close below it, then you see some series of or several rejection candle or bearish candles, then you may enter at this level. Okay, this is for learning purposes, educational purposes only. I'm not recommending you to execute this trade, but it's really more on for your education to learn technical analysis and price action analysis, so that try to apply it in your practice trades. Then hopefully one day you'll be able to, once you have a good winning rate on your practice trades, then execute real money based on your experience, no? Based on your credentials on your past 1,000 trades. So if that will happen and you see series of bearish candles here, then that's the time you can enter, and hopefully your crab pattern would materialize. Huh? Okay, thank you so much. We are almost 2 hours, 1 hour and 40 minutes. So thank you so much for that one. We'll have another webinar next week, but definitely it's for Patreon only. I'm not sure if I can do it on Sunday. We'll be having an out of town this Sunday. If not Sunday or Sunday night, most probably it will be on Wednesday again. It may not be the part 2B yet, or part or second part of this one. Our webinar for next week will be about double top, double bottom, and inverted head and head and shoulder price action analysis, so that I want you to learn that first, so that you can apply, or you would at least you would have an idea, no, what I'm talking about when I said that you have to wait for potential double top at this level for your entry for short trade, or so on and so forth. Okay, thank you so much.